The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the January 2nd. Terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. If you can't dial in, let your fingers do the walking. Go ahead, send me an email, steve@tfnn.com. Inside that subject heading line, please put radio show question. Of course. Hey, inside the Tigers done well, any ping will do. So let's go ahead and get this show started on Terrific Tuesday, 2018. How about that? Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trade up 52 points. 24,770 is the print. S&P's up 17. NASDAQ 100 up 95 points. It's about 1.5%. Semis are up 25 bucks. That's 2% to the upside. So green arrows across the board. Volatility index down by nearly minus 10%. So that's going to be something to watch today. The reason is because if it finishes the day by minus 10% or lower, so that's greater than a negative 10%. Hey, you try to figure that out. That can mark an initiation move inside the markets. Most times it does out there. You need follow through like on any type of signal. You want to see follow through on the next session out there. We may not get to minus 10% or below at the end of the day, but I would suggest that you pay attention to that. Gold is up nearly $6, 13.15. Silver's up a nickel. That's trading out at 17.20. Light sweet crude, no big deal, back 13 cents. Natural gas continuing to make a move to the upside, up 3.5%. Priceline is the leader, dollar-wise, up 38 bucks or 2%. AutoZone in the zone as well, up 30. Google's up 19. Amazon is up 18 bucks. O'Reilly Automotive getting in on the game, up 11. So auto parts entities doing well. Biogen, BIIB, that's up. I just like saying BIIB. That's up nearly 11 bucks. The downside, Arista Networks off $8 and change. Tesaro down nearly 8 bucks. Two Cows is down about 2 cows, 8% or $5.60 out there. Of course, I want to look at what you want to look at. We did get an email. We got a few emails that came in over the holidays. First of all, Happy New Year to each of you out there. You know, let's remember that life happens for us. So let's go figure out what that happening for us is all about out here. And one of the questions that came in, hey, great football. Was there not great football games on? Hey, they're kind of going comatose football games, you know, towards midnight like last night, but still great games out here. But that was not the question. The question was, Steve-O, aren't you concerned that with the S&P, you know, up 18, 19, whatever the percentage was for the year? I'm paraphrasing. I'm not looking at the email because long gone from my phone out here. But basically, it was, hey, I know that you anticipate that the market's going to move higher. You've made that clear, you know, in analyzing your analysis of the charts out there. But aren't you concerned that with such a good year that it's going to be followed up with an even better year out there? And, you know, the only way, and it's a great question because I've been hearing a lot of stuff on the airwaves, as you likely have as well. And the only way that I ever know how to answer a question like that is go do the work. So I don't mind doing the work out there because I wanted to answer it myself because inquiring minds want to know. So let's, for our first chart here, let's go take a look at that hypothesis that after a good year or after a great year, there's no way that the market's going to have enough energy to continue moving higher. So let's go see what statistically it shows. So last year, the S&P, I'm just looking at the S&P 500 right now, was up 18.7% out here. And if we go back, I'm just going to take us back into 1995 because it's very easy. These are yearly candles, by the way, that you're looking at. And the green numbers above each candle represent the price move of open to close. So we're not looking at intra-year, okay, the low to the high or anything, just simply open to close of that year to get a gauge and a feel for how the year performed. Now, if you were to have that philosophy that having an amazing year of 18%, 19% to the upside, that was the end of it, well, then you would have gotten just roasted and toasted. I think I borrowed that. I guess another $1. That's $1 that we have to give to Tom because I think he says roasted and toasted. But that was a 34% move that year, followed by 20% the next. 1996, 1997, 31%, 26.7 the year after, 20% after that. Geez, that's nothing. I mean, what we've done this year is nothing compared to that stuff. Look, let's come back to this chart, but let's first go to Garo in California. Garo, thanks for calling. Thanks for holding. How are you today, and Happy New Year to you?
Thank you, sir. Happy New Year to you too, sir. Thank you.
Thank you very much. Thank you very much. Tell us what you're looking at to begin your year.
I'm looking for CRM at the Salesforce.com.
Yes?
I'm looking at the daily chart, on the 6 months daily chart. I see a double bottom here, and the stochastic and MACD is all the way at the bottom. It has a very good force to push up from here. And on the weekly chart, I see the upper dot ready at 108.37. So if it hits the 108.37, I think it's going to go up at least for 4 or 5 weeks. It's going to be on an uptrend. So it will go over that $110, probably open up a new high. I need your idea.
So if we go back to so the weekly chart, hey, what I like about this, we're starting off the week nicely because my dot lines up with your weekly dot at 108.37. So I like that. So I see, and that's one of Garo's initial price targets out there using the parabolic SAR system. One of the many tools that he uses, along with the 5-period simple moving average, the 21, the 50. And if we take a look at the daily chart, if I go back to the daily chart now, the parabolic SAR here gave us switched to the bullish side out here on December 8th, at least according to my system out here. And one of the things that I know that you look for, and if you're using the daily time frame, is looking at that 5-period simple moving average as well as that 21. Hey, Garo, I apologize. We're going to have to go to a break here. Can you hold on through the break and we'll finish?
Yes, absolutely. Absolutely.
Okay. Yes, all right. So, folks, stay tuned. We'll be back with Garo in California. We'll ask him about the fires out there because I haven't heard anything lately. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We're on the line with Garo in Newport Beach, California. We're taking a look at Salesforce.com. And Garo, the first set of charts I'm going to go ahead and put up on my screen, because I don't want to do the analysis that you've already done with your system out here. Let's take a look at a fresh set of eyes and some other tools. And so we have the daily chart on the left, the weekly in the center, the monthly chart on the very right-hand side. Now, the nice thing about the monthly chart is we have a brand new month, brand new year, and this formed a brand new profile for the month of January. And price is trading above the top of that level, which is 104.06. So that would be a bullish condition as long as that continues. As I move and shift to the center panel out here, we have the weekly set of profiles. And the weekly set of profiles is a bullish structured profile. What I mean by that is I'll turn price off here, and you'll more clearly see that there's three lines out here. There's a bottom, there's a center line. It's not necessarily the very center, and there's top. And when that center line, which is priced at 102.01, is closer to the bottom, this tells us that this should be a strong support area, 100.57 to 102.01. And as we put price back on, we'll see that we never got a close below that. So it couldn't bust it to the downside. This would suggest that on a weekly basis, buyers should be able to push price up to 109.19. Now, I believe that's above your weekly parabolic SAR, but that's the level, that's a price level where it looks like, and it sounded like from your initial analysis, you're looking for this to perhaps bust out the highs and move higher for another 5 weeks. The daily chart, what we know today is there's also a brand new market profile. So there's short-term resistance here at 104.97. That is an area that you would like to see cleared. Now, the swing point that I focus on in this chart is December 18th. There was 3.9 million shares that day. You're moving into it right now with 2.2. So maybe it's similar type volume. It's not like it's knocking, the stitches off the ball. But you want to see this clear 104.97. And if it does that, then it'll create that lightning bolt pattern, volume or not, to the upside that gives you a price projection of the 108.29. So the charts here that we look at, the monthly, the weekly, the daily, suggest that prices should move higher. And the next key level for you is going to be 104.97. To the downside, what I'd like to see is for price, at least today, stay above the 104.02 level. That would also ring true with tomorrow. You'll see I've got this little red line on my screen out here, and that red line it helps depict when the price oscillator, the bottom panel of our screen, is turning up. When it's turning up and it's above zero, it is a bullish sentiment inside the market. When markets are heading lower, that line often acts as a deflection area. So you don't really want to see it close below 104.03. That's what my eyes see as I take a look at the charts, which is, as of 1:21 p.m., everything looks very bullish.
I don't have 104.
Well, you don't have 104. 104, if you can take a look at my screen, if you're watching this on TigerTV,
Yes,
you're going to see a red line. Now that it's right now, it says 104.02, so it changes as price moves higher or lower. But that red line for me is a very key level for being able to interpret what buyers and sellers are communicating to us. Right? It's like in this case here, because of the way that Salesforce has traded, that was resistance, 104.03. We've only seen a close above that red line level, and this has taken us back since it formed a top on November 21st. We've only seen a close above it on December 15th, and it gave it right back up the very next day out here. So I see. It looks to me right now, as I say, prices want to move higher. If they closed under 104.03 today, I would be rethinking that. That's, says you can't break above resistance.
Yes, of course. I have to wait a little bit longer because on the daily chart, on the 6-month daily chart, still the 5-day simple moving average has not crossed.
Yeah, I see that.
50-day and 21-day. That has to cross to give me a first confirmation. If that doesn't cross there, it's no good. It's no good. I understand that, but 104.30, unfortunately, I couldn't find him at all. That's very good. I wrote him down. Thank you about that, Steve. There is one more thing that, if you have the time, SQ square. Okay, SQ is on the daily chart is at it's building the bottom. It's building the bottom. The number on that, it is $36.10. It has to cross there. And then the weekly chart is very, very close to that. 21-day is turning there, is crossing. I'm gonna after I leave. If you have the time, if you can explain a little bit regarding that SQ, please.
Sure.
If you have the time.
So let me ask you one. Yeah, I'll do that for you next. But so are you on this here? You're still going to wait for the 5-day to cross that 21 and then buy that pullback on some type of short-term chart? Is that how you would be trading this?
Absolutely. Yes, I'm going to wait. I'm not going to buy here. I'm going to wait at a higher price, and I sell it at higher price. But I'm not going to buy here at 35.54 and sell it at 28. You see?
Sure.
So, I buy high and I sell higher. Until that chart doesn't allow me or doesn't permit me, I will not buy it. But I'm just waiting for it.
Yeah, so if this continues to move higher, the key price level that you want to focus on, from my perspective, is going to be 37.70. At least that's what it is as of today. 3 days ago, this formed a new market profile. And in this case here, that center line is much closer to the top of the box. Center line's at 36.91, top is at 37.70. The bottom, which is a support area, is where price found support, 34.54. So as you're watching for your crossovers, what you also would like to see is for price to break above a key resistance area, and that would be 37.70, because this is a bearish structured box, in an arguably downtrend that began when this thing gapped down on November 27th. But closing above 37.70 on a daily basis would be, I would say, would be very bullish.
Yes, absolutely. Yes, I'm watching on both of them. The SQ and CRM, I have to wait until it gives me the confirmation on the 5-day. It has to cross all the moving averages, the 21 and 50. It doesn't cross about that, and the candle doesn't stay on top of the 5-day. I will not buy it, because tomorrow it may go down $5. You don't know what's going to happen tomorrow.
Sure. Well, just to wrap this up, so how are the fires? Did they get down towards you, or they had to, right? I mean, you can at least see them, could you not?
See what?
The fires that were in Southern California.
Oh, no, it's far away from us.
Oh, is it really?
I'm in Orange County. That fire is north of Los Angeles. And some
okay.
in Santa Rosa. That's very far away from us.
Okay. I thought that the fires had made their way down into the Los Angeles area.
Yeah, but we are 70, 80 miles away from there.
Got it. Okay. All right.
Yeah.
All righty. Hey, Garo, thanks so much for calling. Happy New Year to you again. We'll look forward to hearing from you soon.
Thank you, sir. Thank you. Same to you. Thank you. Bye-bye.
You bet. So, folks, when we come back from this break, I'll see what questions have come in. We'll go to those. I'm going to first come back and take a look at this S&P 500 chart. And basically, the summary is moving 18% last year is no indication of a top. Hasn't meant that in the past. But great.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back. Right now it's 1:30. You've got the spot volatility index, which is down by a minus 10.69%. Again, I don't know what the end of the day, one-day rate of change is going to be, but if it is minus 10% or lower, that would be, I would go ahead and put another green arrow on my chart. You see the other green arrows out here, and what that represents is initiation moves. Typically initiation moves. Does it work always? No, but I can share with you that it works such a high percentage of the time that you would not want to ignore it. For example, if you were short the S&P 500 specifically. That's what I'm speaking to, because that's where we're taking a look at what the spot volatility index is dealing with out here. If you were short the S&P 500 and you have a minus 10% or lower out here, it would be suggesting to you, don't be short. Not just yet. That would be too early out here, because in the past, those initiation moves have led to higher price, much higher price out there. Yeah, do we have somebody on the line or not? I can't tell from your message out there. So at this stage here, let me go back and just finish up taking a look at the S&P 500, perusing it with you. And we do. Well, if we have another caller, that's where we go to first. So let's go to John in Philly. John, thanks for calling. Thanks for holding. How are you today? And Happy New Year to you.
Happy New Year. Yes, Happy New Year, Mr. Rhodes.
Thank you. Thank you. How was your New Year's Eve?
I love all that chart work you do with the stock indices. That's just fabulous.
Oh, thank you. Thank you. Much appreciated. And we love all the work you do.
Well, thank you. Steve, got a very specific question for you here. It's different than any one I've posed to you, so here it is. On the gold market, it's clear to all of us now, in retrospect, the day before the FOMC meeting back there in December where they raised rates, that gold made a sell the rumor, buy the news bottom.
Yeah.
And what's interesting is since the daily gold price chart has made now something like 13 or 14 consecutive trading days making higher highs.
Yes.
So it's just over that time span, of course, and that's not all that long a period of time, it is relentless, this rally. So my question, Steve, is of all the things that you look at, including stuff you've never told us about, is this price action just the strength of the rally on the daily chart the past 3 calendar weeks? Is there anything in your toolbox that gives us an idea how big a move this is likely to be the next month, 2 and 3, given what's happened the past 3 weeks? Very specific question for you.
Okay, so now that you phrased it like that.
Sorry.
No, that's okay. That's okay. Let me just try to pull up one thing, because I should know this off the top of my head. I don't. So let me just take a look at this longer-term chart that is here. And I just need to take a look at one thing. So, yeah. So there's a pattern that you are very familiar with, which can be a breakout pattern that can lead to a doubling of price. So you're familiar with that. I'm familiar with that. By the way, that low or that doubling of price, so this is going big sky. If that was a significant bottom out here, would be 1045. So the 1045, you could double and say longer term, 2090 would be a price target that sends basically gold back to its highs and beyond, makes a new all-time high. And the way that, in essence, folks, there's an A to B equals CD pattern that each of us, or many of us, talk about here at TFNN. I can draw that in for you. In essence, that is a version of the truth. I like that. No, it's a version of this breakout pattern. And so I'll put just simply the A to B equals CD tool on here. And this is what one would be looking for if we see a break above the B point. And that's going to be labeled here on my system momentarily. It was going to be labeled. It's at 1377.50. And we're just about to trade into the low of that monthly session, which is 1310.70. So I think there's an area that John and I are looking at in that 1310 area. We're already there, right? So the low's 1310.70. We're at 1316. You'd like to see price stay above that. And if price can break above 1377, then it just has a normal natural A to B equals CD to 1456, maybe 1546, maybe 1661. But this is a breakout pattern that was associated with many markets where they had doubling in prices out here. Again, well, we don't know what the time frame is. I'm not that good to identify time frame. So that would be one thing that would say this could be a longer type move. In the short run, though, John, what I am looking at. My expectation has been that gold would move up to the 1322 area. So we are not that far from it. So I expect 1322 to be a level that provides us with a piece of information. That piece of information, whether price wants to just keep on moving up into the 1369-ish area, or whether it's going to pull back a bit. I'm anticipating that it's going to pull back a bit. I will not be unhappy if it doesn't do that. But I've anticipated that so that I'm not worried. So that what to expect, my own expectations, I suppose. 1322 happens to be the top of its weekly profile out there, and that's why I expect that to be resistant from a weekly standpoint. You mentioned the FOMC meeting out here and the signal that it gave to us, and that was on the trading session of December 13th. I believe that was at the FOMC day, John?
That was indeed.
Yeah, so December 13th. And then the very next two trading sessions, price closed above what I like to call Stevie's red line. And once it does that, tells you have at least a counter trend rally in this case here, or a real rally that's going on. Well, the real rally, for me, the real confirmation becomes now that the price oscillator at the very bottom of our screen, and it really did it this morning, now that it is now above zero, at that zero level, this is where we typically will see either a sideways or pullback in price, and Stevie's red line catch up to price. And this can take a series of days out there. And then what you're looking for, so that would be a pullback for anybody who might want to add to their gold contracts, if that's how they're trading it or whatever they might be trading. That would be something to look for. Does it have to happen? No. Does it happen often? So often, like, for example, this morning inside the ES Mini, I'll just put a 30-minute chart out here. You can see the same type of pattern. Now, when I say same type of pattern, I'm referring to the price oscillator on the bottom of my screen. I'm referring to price. This was taking place, the zero line, in effect, was taking place between 9:30 and 10 o'clock this morning. And what happened with price? Price pulled back, tested that red line, that little trampoline line, and then continued moving higher. Just told me that there was not going to be, the market was not going to sell off from the get-go at around 10 o'clock. I expect that same type of short-term pattern to unfold. I don't know if it's tomorrow, the next day, the end of the week, Monday. I just expect it to unfold to provide us with another crucial piece of information. Hey, John, we're about to go to the break. I don't know if hang on if you'd like. If not, no problem. And I wish you a Happy New Year, and I know we'll talk soon. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So we're just going to finish off this chart here. We really tried to start with there. But callers come first. So that's just simply the way that it works here. And the bottom line is at a nice 18% move. Now, the candle looks larger than others, but from open to close, we really want to take a look at percentage moves. 18.7%, not really a huge deal out here. I mean, if you were the belief that, hey, when you have a rally like that, you can't continue to move higher, the market itself, then why in 2013, when the S&P had a 30% rally, was it followed up by 11%? Or why, when there was a 20% rally in 1996, was there a 31% rally the following month out here? So, or the following year is what I should say. So, do not draw a conclusion because the markets have had a nice percentage move up that, this year is going to be different. Maybe this year is going to be different, but it most certainly is not going to be different because of an 18% move to the upside. And that is just simply what the charts show going back the last 20-plus years. And we could go back further. I'm not going to bore you because it shows the same type of thing out there. We had a question that also came in that says, Steve, if you're anticipating that maybe gold is going to pull back, why are you staying long? And the answer is, so subscribers and I are long. We're long the mining sector. We're pretty well weighted in that, overweighted is what I should say. And the reason is this. The work that I've done suggests that this is a pretty good bottom that we've had inside of gold. If I take a look at gold, I like to look at gold in other currency. I like to, in fact, take a look at now markets and just remind myself we have to take a look at these things in other currencies out here. And when we take a look at gold, this is looking at the continuous contract from the highs back in September of 2011. If we just draw a trend line, we know that gold broke above that descending trend line back in August of 2017. So that is a short-term positive. We see the rising trend line, which gold hasn't really touched or pulled back to. So you're in a rising trend. You've broken above a descending trend. That looks good. We've got gold priced in euros. That has held the bottom. That's the top panel out here. We have gold priced in yen. That looks like that's going to be the first one, the next one up to break through a downtrend, so to speak, a level out here. So all looks well. And so take, as an example, take the nugget. Subscribers are either in the NUGT and up 23, 4, 5%, whatever the number is. And the Stevie's red line is at 29.85. Now, no one wants to take a $5 hit to the downside. I don't know if that's going to happen. I can't control what price is going to do next. I can just anticipate that my red line and price are going to eventually catch up to each other. But that catch up is going to be above our entry point. And if I'm thinking longer term out here, why would I try to, when we've got a great entry point, why would I try to outsmart myself? I can't do, I can't do that. I mean, you can do anything you want, obviously, but in this for the longer haul, when you play the triples, you expect a little bit more volatility. You know, if it's just the GDX as an example out here, which was the other option for traders, you'd go, to be a buck. It'd be from 23.66 to 22.77. And I'm not even saying that it's going to get down to 22.77. I'm expecting the two Twains, Mark Twains, shall meet out here. That's the normal pattern. But as I said, if it does it always work? No. And if it doesn't work, am I going to be unhappy? No, I'll even be happier that I didn't try to out-trick the market, so to speak, and I'll just be happier. So that's the reason, and I get that from the reminiscences of a stock operator. The one thing that stuck with me, has always stuck with me, is the story that is told in there. I can't tell the story verbatim, but basically, those of you that have read the book, you know the story about the. You know that there's a story in there that talks about being able to buy, in essence, at a low. And the question is, why would you pay a fortune many times. Now, fortune is, you pay a high price to be able to catch a bottom, just like you pay a high price oftentimes to catch a top. Once you've caught it, why, what has changed? Nothing has changed other than just, some of this daily intraday kind of noise that is out here. Then I could be totally wrong about all that. And I could end up taking the other. We're not going to take a loss on the trade. That much, I can't guarantee that, right? Because you don't know until you're actually out of the trade. And we are not out of the trade. So hopefully that gives you some insight into why I would stick with that specific trade. The reason for doing that is I've been making subscribers aware, and when it came to the GDX, it was like to the day when they said, okay, we're at a stage here where we're going to start seeing price move sideways or pull back. Remember, gold was going higher, but the GDX was not. So I was grateful to be able to share that insight with subscribers so that they weren't having to ask that question. Because we were already anticipating that was going to take place out here. So the next thing we're anticipating is eventually a test of Stevie's red line. And if you're not in the trade, well, then that's where you definitely want to be looking. All right. So James writes in, I've been waiting to go long in MU for a while. Every time I get ready to buy it, it jumps higher. What is your opinion on a good entry price? So that is, that's part of the semiconductor sector out here. So how are we going to look at this? We're going to look at this by as follows. I'm going to switch to I'm going to answer your question. So we take a look at that specific stock. So let me get back here to that's not it, my 3-time area. So MU is the ticker symbol. That's Micron Technology out here. And the specific question was, hey, where is a good entry point on this? So let me come back here. Now, James, the one thing we've got to make sure, I'd suggest that you want to make sure, is we got to make sure the sector has got the same message as an individual stock. And thanks for writing in, because actually they sort of do right now. If I take a look at Micron, what we can see that has taken place here thus far, look at that price oscillator sitting right down here on the zero line, right? Right down here on the zero line. And look where prices bounced right into. Stevie's red line, right? Stevie's red line. So don't chase it right here. This could be nothing more than like what Garo and I talked about for, I think it was CRM, or it was one of the other one, I forget the other symbol right now, but Square, SQ. It was whichever one, but same pattern, right? We're agnostic to the symbol that is really behind this. And so if in fact Micron is going to turn back bullish, needs to close above Stevie's red line, which basically is 43.17 as we speak right now. Because here's our test of the red line. If Micron turns down from here and we start to see a falling price oscillator below zero, the test has taken place. It's done. Now, you'd want to see what's going on inside the sector, right? So if we take a look at the sector, in this case here, ignore the TAS profiles that show up because they're not accurate. I don't want to change charts. I just want to keep that same thought process going. Here, you're now seeing the sector break above Stevie's red line, 1268. Which one is correct? And I don't know the answer to that. But in the case of MU, Just sit on your hands. Wait for both of these to actually break out. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com. Educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back. So let me sum up the markets, because we're in an interesting time period. We took a look at, for James, we took a look at the semiconductor index, seeing that it's above Stevie's red line, but Micron was not right up at resistance. I was prepared. We're in an unfavorable seasonal time frame out here. And my expectation or anticipation was that we would see the market pull back. We have a number of great sell signals out there, but we don't have everything. The everything that I was looking for this morning was the following, and you'll see it out here on this daily review of the NASDAQ 100. The thought process was, hey, the market is going to move lower. We'll see the NQ be the one that, because it has shown weakness lately, that'll be the one that'll go ahead and really start to pull things to the downside. This happens to be the market breadth out here, the market breadth for the daily chart for the NASDAQ 100. When the green line moves above the red line out here, it means we have more issues trading above the top of a box versus those where price is trading below the bottom of a box. Last time we had a bullish crossover in this was on October the 26th out here. And this morning, really I should say as of Friday, but it was also this morning, these two were kissing cousins out here because they didn't like it at all. And they just simply said, adios, sayonara. I'm headed out here, and you see that the positive market breadth still stands today. Now, look, this is not this is more of a lagging tool, but it's a great lagging tool out here. Actually, the September 27th crossover is one that I'm showing right down here. September 27th, where was that one? That was right here, right? Yeah, September 27th, right here. We had one where there was like a few hours of a negative crossover out there. That was the one on October 25th. We didn't get that. We didn't get that. We have now broken above, or we are trading above this little gap that was resistance out here. Quite frankly, the NQ, not the NQ, the NASDAQ 100 could be forming an A to B equals CD to the upside. Be careful if you're short out there. Some very interesting things going on inside the market, including the NASDAQ 100. Looking at 66.83. Take care, folks. We'll see you on Wonderful Wednesday.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. No matter what kind of trader you are,